Hello everyone, this is today's video analysis for February 18th, 2019. Today we're taking a look at the USDCHF, the US dollar, versus a Swiss franc for today's trade analysis. Three trends here on the daily time frame. Previous uptrend, blue trend line representing the downtrend. Then we had a new uptrend on the right hand side, the black trend line, pressuring higher over the past several weeks. We have pushed all the way into, basically since the beginning of the year, we've pushed all the way back up here into the 1.01 level, found resistance over the past 4 or 5 days, and now showing some signs of reversal, coming back down and challenging the rising trend line. That's a very interesting situation, isn't it? The past 4 days have found support at the yellow zone, 1.005035. We've seen these candle bodies sitting on top of that yellow zone for the past 4 days, and now we're underneath it. So the question is, are we looking at clues and signs of reversal? Now we need to be careful that we assume that this is reversal just because it's underneath this black trend line. Again, the black trend line representing the rising trend. Just because it's underneath it doesn't mean we're looking at reversal, but it could be signs and evidence of potential reversal being underneath the 0035 level. The next zone down, the next support down would be 1.0010, 0.9995, the green zone down here. Let's go back in history just for a moment and study the last time the market got underneath the yellow zone after hitting the pink zone. You can see right here, top of the black and the blue trend line, left hand side where the circle is now, we got underneath that yellow zone and began a new downtrend. So we need to be watchful and waiting to see if we can find a setup that will improve our chances that that's the real deal and not just a false breakout. What I mean by that is we've seen something like this before. Now, it did, of course, at that point, move into the 100 period moving average, and I'm looking right here at the blue zone. Take a look. It made a pullback. We even saw 1, 2, 3 candles test underneath the 99.20 level, push underneath that blue zone, and eventually turn back around. So I don't want this to happen to me. I don't want to assume that it's breaking the yellow zone like we could have assumed the blue zone, and then it turn around and go back up in the other direction. So how do I protect myself from a false breakout lower and get a real breakout lower? So I'm looking for a setup that improves my confidence in a reversal rather than just a false move. For me, that's going to be waiting for a full candle body to get underneath that yellow shaded area. That's going to improve my chances of a real breakout rather than a false breakout. Just think if you'd have done that down here where the black circle is in the blue zone. If you said, well, I'll wait until we get a full candle body under the blue zone, you protected yourself from a false breakout lower, and then it turned around and went back higher. So again, that's just improving our chances, improving our confidence that it's a real push lower. Now, on the left-hand side, it didn't do that. So again, it's only something there that improves your chances and confidence waiting for that open and close. But again, that's just all we can do as traders is look for things that improve our confidence and our chances that we're going to have a fruitful trade and not fall prey to those false breakouts. So I'm looking for a candle body underneath 0050, 0035, the yellow zone, to give me confidence that it's a real breakout. Now, that means we're 2 days out here on the daily time frame. We have to wait for today to close, the next tomorrow to open and close, and then the next day before we can really have confidence that it's going to stay under the yellow zone. That's a long time to wait. So what we can do is take it down here to the 4-hour time frame and begin looking for those similar clues on the 4-hour time frame. And again, it's never going to be a guarantee, but it improves our confidence. Again, come back down here to the black circle, same area, blue shaded area, 99.20. Look at that. No open and close under the blue zone here on the 4-hour time frame either. So that saved you from selling under the blue zone, even though it was challenging and testing. And you didn't, hopefully, and then it turned around and went back up. So again, it's that setup. It's the candles that can get underneath and sustain a hold underneath there that's going to improve our confidence. So we see the current candle potentially doing that. So that's something we'll watch over the next several hours. Will it stay underneath 0035? Will the US dollar pull back further and go lower? If so, we look for it to stay underneath the yellow zone. We'll look for selling opportunities targeting lower levels like the green zone or maybe even the pink zone as it continues to pressure higher. At some point, if we do decide to take the short, the risk then becomes it pushed back above the yellow zone. So then we know that we can set stop losses above the yellow zone once it breaks underneath there as a potential trend reversal and trade setup for the dollar franc.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.